Hi traders, it's Roberto, and this is the continuation of the Pro Traders Workshop series. And today's lesson is part 2 on how to find the best trade setups, the high probability trade setups. And it's simply just looking at different time frames and finding clues on each time frame that can support one another. And for example, on this trade on Aussie dollar back in January of 2016, we have divergence on a 4-hour chart and a trend line break. And we have several candlestick patterns at a support level give us some more clues as to the reversal pattern that most likely will happen. Now this is on a 4-hour chart, so I notice we have divergence, a trend line break, but I also need and would like to have confirmation on another time frame, which is the daily chart. So the daily chart, here's the setup right here. I'm looking for the two lines in MACD to cross to the upside to support the divergence setup on the 4-hour chart. And this is necessary. And oftentimes it will happen immediately after a divergence. Other times it's lagging and it may not happen until much later. And in this case, that's what happened. Here are the two lines of MACD crossing to the upside, and that was our confirmation that this divergence setup was confirmed. So there it was. So we could not take this trade until here. And notice that market did come back down to a support level, which is essentially a Fibonacci level, from this swing low to the swing high. So this was the confirmation that this divergence on the 4-hour chart is complete. Just remove that line. So I most likely would have taken this trade down here, taking my Fibonacci tool, draw from the swing low to the swing high, and market came back down to a 50% retracement level. That is the ideal entry right here. You wait for the rally, wait for a retracement, and then take a trade. We also have a hammer on the daily chart. Confirmation on a daily chart that this trade should continue to rally. We have a pullback to a 50% retracement level, and there's your trade. Okay, 316 pips initially. So again, when you're looking at a trade setup on any time frame, whether it's a 1-hour chart, 4-hour chart, daily, it doesn't matter. It's wise just to look at another time frame to see if you find other clues that may help you support what you see on any time frame. In this case, we had a trend line break. 1, divergence. 2, 3, daily chart, confirmation, the two lines here crossing to the upside. Okay, 4, we have, go back to the 4-hour chart, we have a pullback and a nice hammer at a 50% retracement level. So these are many reasons why this trade worked out and continued to rally, and it just kept going up. You notice it just kept on the 7th, 8th week, 10th, and it just rallied. So this is what a good high percentage trade setup looks like when you're looking at different time frames, and you essentially have correlation. You have 1-hour, daily, 4-hour, weekly charts, all pointing to the same thing. We didn't even look at the weekly chart. Let's see if there's anything on the weekly that may help us take this trade. And interesting enough, we had divergence on a weekly chart. So there was the trade setup here, and there are swing points going lower on the weekly chart, but MACD is wave patterns are going higher. So many reasons to take the trade on a weekly and a daily chart, on a 4-hour chart. Let's look at a setup. This is the signal that was sent out yesterday, and the trade analysis, also the video that was sent out. Here was the divergence setup. Let me just do this again. Again, many reasons to take a trade. We have divergence on the daily chart. We have also a trend line break. Okay, and we also have and there's the trend line break. Here's the retracement. Take your Fibonacci tool from the swing low to the swing high, and there it is. There's your trade setup. 61% market came down to the 61% retracement level, which is the most popular Fibonacci level. Again, divergence on the 1 hour chart. Just make these lines bigger so you can see divergence clearly. Wave patterns going higher, swing points going lower. A break of the trend line comes back to a support, 61% from this swing low to the swing high. That was the entry, and we're currently in this trade right now. Okay. Let's look on the 4 hour chart. 4 hour chart, we have a bullish engulfing candle that printed yesterday. So that was another clue. So looking at divergence on a daily chart, bullish engulfing candle at a previous support level on the 4 hour chart. We also have divergence on the 4 hour chart as well. And I think also divergence on the 1 hour chart, as I remember we went over this yesterday. And yes, there's the divergence setup on the 1 hour chart. So each time frame has its own story, has its own clues as to what's going to happen to a particular currency just by looking at each time frame and seeing if there's a trade to take. Also, this trend line breaks. These are high percentage trade setups. When you don't have high percentage trade setups, is that 1 hour, 4 hour daily charts that they're not lining up. There's no clues. Maybe the 1 hour chart is selling off, but the 4 hour chart there's a strong uptrend, or the daily chart is consolidating. Those are the type of trades you definitely do not want to trade. You want to stay away from those types of setups. This is a perfect trade setup. 1 hour, 4 hour chart, daily chart, all lining up. The other one, I think, when I sent the signal out, was the Aussie Swiss. And again, we have divergence. Just highlight these. We have swing points that are going higher, and we have wave patterns that are going lower. So we have divergence on the daily chart. Then we take our Fibonacci tool, draw it from the swing high to the swing low, and we have price rejecting that 61% retracement level. And it also gave us candlestick patterns that are reversal. We have one hammer here, another hammer there. So this level of resistance, very difficult to break. And there's your trade. Okay, let's look at another time frame, the weekly chart. If there's anything on the weekly chart that would happen, that would help us. And we do. We have an evening star that occurred back in August 7th, right here. And price retraced and then rejected that level of resistance, and now it's on its way down. So here's another bearish engulfing candle. So this whole area up here is giving us all these signals, all these clues that market does not want to go up any higher. Now eventually, because we do have divergence here on a weekly chart, at one point it may break this level and keep going north, but right now it's respecting these levels of resistance. And based on every time frame, again, we have evening star on a weekly chart, we have divergence on a daily chart. Okay, the 4 hour chart, again, we had inside bar on a 4 hour chart in this trade, and a trend line break. Okay, so each time frame is giving us something to help us if we should take a trade, if it's a high percentage. Now, we're hitting right now this level of support. It's going to be difficult to break because it's, look at this level back here, the end of August. It started I guess around August 30th, this whole level of support, we're going to see if market, this would be a great place to exit a trade. And if the body of the candle closes below the support, then I would enter the trade again. But right now the markets, it is Friday, and usually Fridays are setting up for Monday retracement. So, but I would think based on a daily, on the 4-hour chart, the weekly chart, that this should continue to sell off. Okay. Again, using multiple time frames to find clues as to whether you should be taking a trade to sell or to buy. Okay. Here's another one on Aussie dollar, and let's put up MACD indicator, and we do have divergence on MACD on a daily chart, and there's the retracement and there's the sell-off. We also have several clues. Number one, inside bar, and we have a hammer. These are reversal candle patterns. Divergence, so we have many reasons on the daily chart why this should sell off. Now it's getting very close to the trend line, and I would suspect that it eventually will break this level of support because what we see on a daily chart. Let's see on the 4-hour chart. We had an inside bar on the 4-hour chart. So you notice that we have clues on each time frame. The 4-hour chart, we had hammer. The daily chart, we had a hammer. On a 4-hour chart, we have an inside bar. We have crossover on MACD on a 4-hour chart. And right now, the daily chart, the 2 lines of MACD crossing to the downside, and we have that hammer, and we have divergence. Here's divergence. Here's the retracement. Rejected the swing high, and heading back down. Okay. And that's it for this tutorial. If you have any questions, just send me an email. I'll be sending more videos on high percentage trade setups. It's important that you know your candlestick patterns, that you understand how to draw trend lines, that you understand clearly how to recognize divergence setups. 1 hour, 4 hour, daily charts, and weekly. There was actually another, oh yes, USD yen. Let's look at a weekly chart. There was a great trade setup. Here it is. I highlighted it. Here's divergence on a weekly chart. Trend line break. That's a weekly chart. Let's look, and we need remember we need confirmation on the next highest time frame, which is the monthly chart. Go to the monthly chart and notice the 2 lines of MACD cross to the downside. So this divergence on the weekly chart was confirmed by the monthly chart. Let's look on a daily chart if there's anything there. And we also had divergence on a daily chart. So again, multiple time frames telling us basically the same thing. Everything is pointing for the USD yen to sell off. There's the trend line break. There's the retracement. As anticipated, take your Fibonacci tool from the swing high to the swing low. I'm sorry, I'm not drawing that correctly. So it's up here. Let's remove that. Here's the swing high. And there's the swing low. And price around the 61% retracement level turned around and headed south. Okay. So again, multiple time frames, daily, weekly, and monthly chart was giving us all the clues we needed to tell us that the USD yen was going to be selling off back in 2015 September, and for an entire year. That's exactly what it did. Okay. So that's it for this tutorial. Please contact me if you have any questions on these videos. Have a good weekend. Thanks for watching.